Hi, I'm Margot,
And I'm Christy.
and we are WeCree.
We
We invest
invest in
in
commercial
commercial
real
real estate.
estate. Today, we are talking to you about Access Manning, and this is our latest acquisition. This video is just about the property. This is not about why self-storage. It's not about why WeCree and our fund. This is just about the property. If you want that other information, please check out some of our other videos. So we're going to go ahead and
Get
get
started.
started. Let me share screen here. Access Manning is a 506c investment for accredited investors, and it is 160 units. Margot?
So, our confidentiality and disclaimer statement, you've seen it before. Most importantly, this is not an offering. This is just a webinar for your information only.
We'll skip past our mission. You can pause and read.
And you've all heard about us before. So, again, that information is available elsewhere.
Let's get into the information about this deal. On March 26th, we closed on this property. We bought it for $1.3 million, and we project an exit at about 3.2 in 5 years. We plan to raise about $800,000 for improvements, and we will refine these numbers over the coming weeks. This deal came together very, very quickly, and we'll talk a little bit about why that happened. But for right now, what we want you to know is that we do have Class B shares available. They have a 10% pref and a 20% average annualized over our hold period.
And the great thing about this investment opportunity is you can get in at $25,000
Right.
also, which is lower than usual.
We have never had an entry point this low, but we are very happy to do it because our raise is small, and
right.
we are reaching out to a lot more people that have not invested with us before. And so this kind of gives you an idea of what we're all about. So why this deal? Well, we've given you the basics. You can pause. This is the address and so forth. It's a great location, and we'll dig into this in our webinar in just shortly. But basically, it's a really interesting deal, and the way it came about was really cool. So the person who was in contract to purchase this property normally buys hotels, but he realized that this is a good deal. He also, and to his credit, realized that he cannot take down a self-storage deal. It's very different than hotels.
Not as lame.
It's not, hotels are very specific. And so he reached out to a broker that he knew, and the broker said, hey, you know what? I know one group that can probably take this down in the time frame that's needed, and because of the size. And so he made one call, and that was to me.
Yeah.
And fortunately, I was able to quickly underwrite it. Margot and I were able to hop on a plane, go take a look at it, and it was much better than we expected. We were very excited, but we had to close on it in less than 30 days. It was just about 3 weeks was our time. So we are currently, we own it, which decreased the risk. There's no acquisition risk in this case. And that's fantastic.
Yeah. So here we have the unit mix. As you can see, it's mostly non-climate control, but there are, 18 climate control units. And so that's kind of nice. And there is currently parking for 4 vehicles, but there's plenty of room on the property for other parking, lots of extra room.
Right. And most of the units are larger units, 26% 10 by 10s, and then 30% 10 by 20.
Yeah.
That's fantastic, especially for this market.
So this is a really great area. I don't know if people are aware of this or not, but South Carolina is one of the states that people are moving to. They're migrating to instead of away from. So South Carolina is growing rapidly, and that's a great, it's a great opportunity that we found this, and this is a unique area. Christy will talk a little bit more specifically about Manning.
One of the things, so when we first visited this area, a few things really impressed us. The hotel that we stayed at had a Tesla charging station next door and a Lowe's that just opened just 5 minutes from where the facility is located. A Lowe's has just opened, brand new. And these are companies that do a ton on research and really put a lot of money into where they should open. And not to say that they're smarter than us, we are following the smart money, but they definitely outspend us on research.
For sure.
Right. And as far as Tesla is concerned, yes, we are on a major highway. And so for Tesla, it is a good stopover, but they could have placed that any place. There's so many locations and they placed it here in Manning.
And Manning is, it's the county seat and it is the hub for several towns that are around the city of Manning.
Right. It's also really great for local fishermen and fishermen all across the state. The biggest lake in this state is right here in Clarendon County, which is the county that Manning is located in. And what's cool about that is it brings in a lot of fishing tournaments, a lot of people who will leave their boat in this area for months on end and attend the fishing tournaments. So then they're not trucking their boats back and forth. So that gives us a lot of good opportunity to get some seasonal rentals.
It draws people from a really large area, not just the state, because it is such a big lake.
Yes.
So the demographics here are really good. It's a hard working area. The median household income for the county is about $52,000, which is great. There's high ownership and vehicle ownership, 73%, which correlates, with really good storage use because people in this income bracket and with this kind of ownership, they have stuff, they buy toys, they buy things, and the more things you have, the more you need storage.
And you don't always want those things stored at home. As a matter of fact,
or you can't sometimes.
Either you can't, or someone's at home telling you, "Hey, get all those toys out of here. We don't want those. I don't want to see those all the time." A lot of companies are investing here and building. Manufacturing is really exploding here, which is something that surprised me as I started digging deeper into, okay, well, South Carolina has, the strongest in growth. Why? Well, it's first industry is coming and people are following. And this is just what's happening. So a lot has opened here in the past year and a half. And there's a lot more planned that's coming.
It's also an area that if you live on the East Coast, which I do, a lot of people retire to South Carolina. It used to be North Carolina and Florida. Well, a lot of people now are going to South Carolina.
Right. It's blowing up.
Yeah.
We had a really cool conversation. So a lot of you that might be watching are from California. In California, when we close transactions in California, no one comes to the closing table. This was actually the first time that I purchased any property where the sellers, the buyers, and an attorney all sat at the same table. So after we all signed documents at the closing table, we then just had a really cool conversation with the seller who it's a family and they own a lot here in Manning, to say the least. And the father is in the process of handing everything down and putting the son in charge of the empire, for lack of a better way to put it. And so we were talking with the son, and he had a lot of interesting insight, smart as a whip. And they own hundreds of single family homes, multifamily, commercial properties, hundreds of
300
properties.
and some, I think is what he said. That's a lot.
It was astounding how much they own
just
in
the
area. And so to hear him say and talk about owning in this local area and why they bought the self-storage facility, or why the self-storage facility, how it came about. But he really echoed something that we always suspect, the type of properties that we buy. He actually said out loud the quiet part, which was they owned billboards. They wanted to do billboards. And so along the major highway, what the county said, they changed their rules. This was 30 years ago
Yeah.
almost. They changed their rules because too many people were just putting up billboards. They said, you know what? You have to have a business. If you're going to put a billboard up, you need to also have a business. So they had 15
On that property.
on that
Yeah.
property. They had 15 acres of land, and they said, well, what kind of business do we want? Hey, let's build self-storage.
That's easy. That's cheap.
It's easy, it's cheap. So they built one building, and that was in 1985 or so. They built one building of self-storage, and that original building still stands. It's a nice,
Solid,
big, solid,
block building.
right,
Yeah.
right. And then they put up 3 billboards. What they quickly found is that they were making more money from the self-storage. So then they started building, expanding.
Every time they'd have extra money, they'd do
Right.
another building.
They do it.
Yeah.
So it wasn't well
plan.
planned, but it grew and grew and grew to 160 units over the years. Also, what happened, because they own the land, because they built it with money that they already had, so they had no mortgage, they didn't owe anything, money was just flooding in,
Raking in the cash.
hand
Yep.
over fist, which meant, well, money is coming in. Now we have all these other properties. If there was a maintenance problem and they were going to spend maintenance dollars, they did it on other properties,
Yeah.
not on this one. So there's a lot of deferred maintenance, not nearly as much as we would
No.
expect,
Mm-mm.
but there is some deferred maintenance. And they did not know how to run self-storage. They had no idea. But here they are with 160 units of self-storage, and they're doing their best, but it really shows.
They were running it like residential property management,
Right.
and which is not efficient. It doesn't
No.
make sense. So
No.
they were just ready to not be in the storage business. It's not their thing.
Right.
Yeah.
When you wanted to rent a unit, you went into the office, you signed a contract. If you wanted to pay cash, you went into their office and you could pay cash, you could drop off a check. Extremely inefficient way to run the property, very labor intensive, and they were tired of it.
Yeah.
And that's another reason that, it was kind of the unloved asset
Right.
of the whole portfolio,
That's right.
even though it was making money hand over fist. So it's amazing. This property fits our buy box.
Yep,
It
sure
is classic.
does. You've just heard the great story and why it wasn't very well managed. It just wasn't their thing. And
Right.
and he said that. He said he just didn't care.
No.
They didn't care. They were making the money. They just let things go. And once it got to the point where they just didn't want to mess with it anymore, they
Right.
sold it.
Customer service, get this, 9 a.m. to 4:30 p.m. Monday through Friday, and not
Actually,
really until 4:30.
Fridays till 2 or noon.
Every day actually
Yeah.
is until 2:30
Yeah.
because the person who was answering the phone has her second job as a full-time mother, bless her.
Yep.
And so, she did this in the morning, and she, once the kids got out of
Yep,
school,
she left.
was mom
Yep.
time, which we completely understand.
Yeah.
Again, not the way to run a business.
Yeah.
Not at all the way
Not
to run a
that
business.
kind,
No.
Mm-mm.
So rents are low, customer service is poor, maintenance is poor. It's everything that we love.
It's our perfect property.
And this is why we hopped on that airplane and
Yeah.
we came to see it, and we
Yeah.
closed on it, and we moved heaven and earth to get this done in less than 30 days.
Amazing, really.
Yes, yes. So and lots of low-hanging fruit happening here. This are normal things that we like to do. So
Yeah.
here we have our rent comps, and you can see
mind blowing.
Mind blowing. On the 5x10s, yes, significantly below at 40. The 10x10s, almost 50% below. The 10x15s, everything.
Same. Yeah.
And the other thing that's important here is, because this is a kind of a smaller market, there is no professional management for any of the properties here.
Right.
So we have a really great opportunity to come in with our professionalizing the facility and getting our Google business page. People here are savvy. When they're looking for storage, they are going online and they're comparing, and they're so the fact that this property has 70% occupancy with zero marketing, zero effort is astounding.
Yeah. So what's our plan? we're acquiring it, or we have acquired it. That's always step one of our
Yes.
plan. And then we're going to implement our CapEx campaign. And, usually we paint first, but there are a lot of doors that need work. So we're going to repair the doors first before we paint. And we're going to work on the fences and security cameras. They're very lacking. The fences are really there's sort of a big fence at the front for show, and then the rest is short or not there.
Right.
So we're going to take care of that and then eventually get to the gravel. But there's a fair amount to do, but we anticipate being able to get that done pretty quickly. And that's phase one of the CapEx.
Right. Again, it should take us less than 6 months to get through all of our CapEx, which
Mhm.
is always our target. We should get through at least 95% of what needs to happen in 6 months. And this is standard for what we do for self-storage. There is, however, I will say there is the potential to do some expansion. Some of it, absolutely, we can do inside of 6 months.
Yeah.
The other, there's an acre and a half that we can expand into. And that's going to be a second part of this whole process that
We'll evaluate
that we'll
whether to do
evaluate.
that and what to
Right.
do as we get
and
closer.
weigh the cost and
Yeah.
the returns
Yeah.
and all of that. Again, 5-year target hole, and we're estimating a valuation of about 3.2 at a 7.5 cap, which is very solid.
Yeah.
We've talked about this, as
Third-party
always,
management is always
right?
the key.
Right. This is the first time that we are going to rebrand a facility.
It's true.
This property has two names, Deerfield Mini Storage and Deerfield Warehouses, and
Right.
nobody cares about the names. You look at their business, Google business page, they have a handful of reviews. It's just not, it's not a great name.
Well, yeah, and Deerfield is kind of a meaningless name.
It's a street.
And it's not even the street it's on.
Right. It's not even. So what's going to be our new name?
Manning Self Storage.
Why not? So
Right?
we've got the URL, which is Manning Self Storage SC. And it's funny because the seller, when we told him just after when we were talking, we said, "Oh yeah, we've got the URL Manning Self Storage." He said, "No, you don't." I said, "We have Manning Self Storage SC." Apparently, he already has Manning Self Storage, and he thought he was going to sell it to someone.
No, thanks.
Not us. So Manning Self Storage SC is even better than Manning Self Storage because it denotes it's South Carolina. So we're very excited about the rebranding. We have a new logo, and we're putting all that.
That's another thing. We're going to get new signage.
Right.
Lift that off. Yeah.
Right. So all new signage, all the door repairs, the drives, as Margot said, painting, our curb appeal, and
fences, cameras.
Right. And we can easily add parking. We can also potentially do temporary units. They're called temporary units because they're not permanently affixed to the ground.
Foundation.
One example is a company called Boxwell, and they make a really nice product. So we're evaluating. We could easily bring in about 12 of those, which would increase our value by over 200,000 really, really quickly as soon as those are leased up. So these are things that we are evaluating, and a lot of
possibilities here.
Yes, we like it.
Opportunity.
We like it. The financial analysis. So again, this is a really great deal for us because we have seller financing, 5 years, no prepayment penalty. The first 3 years at 5% interest only, and then the remaining 2 years at 5% fully amortized over 30 years. We have a long runway to get everything ready and done on this, which is fantastic for us. Our debt is $1,170,000. And again, we're going to raise about 800,000 on this. So this is just under a $2 million value deal for us. And we have here our purchase price, our closing costs, our CapEx budget. Our CapEx budget with reserves, etc., is pretty sizable because we're going to redo our driveways, which we're getting bids right now. It's gravel and grassy, and that's not exactly awesome. So we're looking at, do we add more gravel? What type of gravel? There's asphalt chips. There's a lot of different options, and we're weighing those options to see, what we
makes the
think
most
is best,
sense.
right? We're back at our normal 3% acquisition fee on this one. Our last deal had a super low acquisition fee, which was uncharacteristic, but we're back at our 3%. And we have, again, just under 2 million is the value of this project. I know this slide is teeny tiny, so pause it and zoom in. But the bottom line here is we are increasing our NOI, just about doubling. Well, actually more than doubling our NOI from acquisition to the end of year 5. And as you see, by the end of year 4, we've doubled our NOI. That's where our target is.
That's our goal.
If we can double NOI, then that's where we want to exit. Our cap rate sensitivity analysis, we're buying this at an 8.6 cap, which again, because these are sellers who had no business being in self-storage and just kind of, fell into it, because this deal happened really quickly, because it does need a lot of work, we're getting a really good value on buying this. And so we are projecting our exit at 7.5, but a lot of storage right now is selling at 6.5 at most. So I think we're very conservative on our cap rate, and we're looking at, if the cap rates can go up to 10, which highly unlikely,
right? But we'd still be okay.
We'd still be okay for our investors. We would suffer at a 10 cap. We make nothing, but our investors.
And that's not going to happen. You guys are solid,
right? Right. So we don't have any more Class A shares. Class A for this deal was people who could act extremely quickly and help us to close. We do have Class B, which is still very solid returns, a 10 pref, 20% average annualized. And I do apologize. There is one error on this slide. The pref will begin after Q2 in year 1. So I will correct this before we send out the slide deck. So 10 pref beginning after Q2. And the reason for that is we close so quickly. We are running really fast to get things done, and we want to be very, very comfortable by the time that we start doing our distributions. And we could do it at the end of Q1, but we just want to be very comfortable.
We don't want to promise something
that we can't deliver on. And so that distribution for Q1 is going to be put on the back end, is what our deal term sheet says for this. 25,000 minimum investment.
Can't beat that.
Right. And here you have our projections for what those distributions would look like. So it is a 2x equity multiple if we hold for the full 5 years. Otherwise, it's a 20% average annualized. How to invest?
There you go.
Well, I mean, if you have this in hand, you could click right there, but you don't. So, but you will. You will. So if you are not already a member of the fund, you need to join the Wheat Creek Capital Fund 1, and that does not obligate you at that point. You're just understanding our investment philosophy. It's signing our PPM. Then you'll receive our deal level disclosure, and that will be the deal level disclosure for Class B. And we'll send that to you after you've already joined the fund. Like I said, you're not obligated to join the fund. You still get to read the deal level disclosure. After you agree to the deal level disclosure, then that's when you're actually investing. So once we confirm that you've done that first step, those first 2 steps, then you'll be ready to go.
And the great thing about doing it this way is once you have joined the fund, you don't have to do that part ever again. You just have the deal disclosure in future deals.
And the deal disclosure is less than 20 pages, I believe. But the PPM level is over 100 pages. So understand that one time, and then it's just the disclosures about the individual deal. We hope you enjoyed the information we presented to you. We're more than happy to talk to you about this. We will have a lot of other videos about this deal. We will do a kind of a Q&A, a FAQ, a shack. Should have asked questions. That's a new term that I've heard. So
I like that.
yes, so please contact us if you have questions and let me flash. Here's our contact information. We look forward to talking with you.
Yeah, thanks for watching.
Thank you. Bye.